Trump's retreat, tariff rollbacks, auto carve-outs, and the long road to trade peace. After weeks of financial turmoil and rising trade tensions, the Trump administration is now engaged in a series of walkbacks, signaling that pressure from Wall Street, industry leaders, and economic data is shaping its hardline stance. The narrative has pivoted sharply from escalation to appeasement, but is it strategy or survival? Number 1. Car makers win a reprieve. In a rare win for industry amid the tariff blitz, the White House is set to exempt U.S. car makers from some of the steepest trade levies, including those tied to China's role in fentanyl production and steel aluminum duties. Executives from automakers like Stellantis and other major manufacturers reportedly warned the administration of the risk of job losses, price hikes, and major supply chain disruptions. The exemptions stop short of removing the 25% vehicle import tariff entirely, but reflect a clear pattern. Trump is carving out key sectors to cushion domestic backlash. Number 2. From hardball to handshake. China tariff rollback in the works. Multiple reports now confirm that the administration is actively considering slashing the most punishing China tariffs, potentially by more than half. Under one-tiered plan, tariffs would fall to 35% for non-strategic items and 50 to 65% for goods deemed of higher national interest. While President Trump hasn't finalized the decision, he's publicly signaled a softer tone. China is going to do fine, he said, and added he'd be very nice in upcoming negotiations. Sources close to the administration suggest the White House is using this as a pressure valve release, a way to stabilize markets without appearing to retreat entirely. But there's a catch. No formal talks with Beijing have been scheduled, and China has insisted it won't negotiate under threats. Number 3. The whiplash economy. Trump's policy reversals on Fed Chair Powell, China tariffs, and industry exemptions appear to be driven by stark economic warnings. Executives from Walmart, Target, and Home Depot warned of empty shelves and spiking consumer prices. Market data shows that consumer sentiment is souring and inflation expectations are climbing. The initial hints of the escalation sparked a relief rally, with futures rebounding and investors tentatively pricing in hope. But volatility remains. Wall Street continues to brace for uncertainty as the administration sends mixed messages on auto tariffs, electronics, and new probes into truck imports. Number 4. Final insight. A tactical retreat or strategic reset. Trump's shift feels less like a change in philosophy and more like a tactical retreat. The administration is still committed to the broad goal of decoupling from China, but is now recognizing this short-term economic coaster moving too fast without a safety net. Markets are watching for whether this softening leads to real negotiation or is simply a pause before the next blow. If the former, we may finally see a sustainable path forward. If the latter, brace for the next shock. Thank you.